Two forces now shape the future of Ethereum: a political shift in Washington and a surge in technological strength. Here is what changed and what it could mean for the price of Ether. The latest signals from the Trump administration reveal a quiet move away from Bitcoin and a growing alignment with Ethereum. This transition did not happen overnight. It began as internal disagreements formed around digital asset policy and as broader economic priorities reshaped political messaging. During the early phase of his second term, Donald Trump spoke confidently about supporting crypto markets. His team promised to reform the securities regulator and ease pressure on the industry. They also discussed building a national Bitcoin reserve. The tone suggested a new era of predictable rules and industry-friendly policy. But then the economic agenda shifted. A trade confrontation with China became the central focus. Each tariff announcement triggered sharp market reactions. One major shock came from an October 11th announcement that cut nearly $200 billion from the crypto market. Bitcoin dropped from $122,000 to $107,000. Many large alternative coins fell more than 15%. Uncertainty increased further when the Treasury stated the United States would not accumulate Bitcoin for national reserves. The market interpreted this as a reversal. Public comments about crypto declined, and the administration leaned into artificial intelligence, quantum development, and biotechnology instead. Yet one asset quietly remained in the conversation: Ethereum. While Bitcoin lost political priority, Ether gained momentum. The clearest signal came from investment behavior. Corporate structures linked to Trump increased their exposure to Ether. The portfolio of World Liberty Finance, valued at $7.027 billion, became heavily concentrated in Ethereum. There was no diversification across multiple coins. The entire strategy revolved around Ether. Analysts noted that such positioning suggests long-term conviction rather than a short-term trade. The relationship between Trump's business network and Ethereum became a frequent topic in professional circles. At the same time, Ethereum's fundamentals strengthened. The securities regulators chairman Paul Atkins stated that financial markets in the United States will transition to blockchain within 2 years. The plan focuses on tokenization. Most experts believe Ethereum is the leading candidate for this shift because its ecosystem already supports tokenized assets and institutional-grade infrastructure. If the United States adopts tokenization at scale, demand for Ether could rise. Ether is required to operate the network, and tokenization increases activity and settlement volume. The Fusaka upgrade added further support. PeerDAS lowered node load and improved scaling for Layer 2 systems. New BPO forks allow higher blob capacity without major hard forks. The gas limit increased to 60 million. Developers now enjoy better throughput, faster finality, and lower congestion. Financial metrics now reflect this improvement. Average daily fees, measured over 90 days, dropped below 300 Ether. That level was last seen in 2017. The decline comes from better distribution of demand between the main chain and Layer 2 solutions. As the network becomes more efficient, reliance on external scaling systems decreases. Price action shows consolidation. Ether trades between $3,050 and $3,200. Buyers defend the zone near $3,000. A break below could trigger an 8 to 10% decline, according to analyst Ted Pillis. But if Ether closes above $3,300 and $3,400, he expects a move toward $3,700 and $3,800. This structure forms a base that some investors believe may start a new cycle. Last summer, Ether traded near $4,950. It later fell to $2,950. Now the market sees accumulating pressure. Several analysts forecast a rise to $10,000 in 2026 if the network keeps expanding and institutional demand grows. The alignment between Trump's investment structures and regulatory plans for tokenization adds more weight to this outlook. If these trends continue, Ethereum may gain the momentum needed for a significant move. The combination of political interest, regulatory clarity, and technical upgrades forms a powerful setup. For investors, the key is watching whether Ether breaks above resistance or loses support. Market direction will depend on regulatory execution, institutional participation, and broader economic conditions.